Hello everyone and welcome back to Crypto Oracles. Are we in a bear market? Is Bitcoin going to crash further? And how can you make profits in such market conditions? In today's video, we're going to answer all these questions. If you're new to the channel, don't forget to subscribe and smash the like button. Check the links in the description down below to join our Discord channel, join our NFT whitelisting, follow us on Twitter, and feel free to ask any questions. So let me start by taking a look at the price action of the last couple of days. So Bitcoin had been consolidating and ranging in the $40,000 level in the last couple of days. We saw a head and shoulders pattern, which in technical trading usually breaks down below the neckline, which is exactly what happened here. We're now probably going to consolidate for a few days at the $35,000 level, which we consolidated for a while back in June and July 2021. But I think it's also likely that we may bounce down and back up from the $30,000 level, which is our the strongest support level we have. Interesting to see is the RSI. So the RSI touched one of the lowest points since May 2021, where we consolidated at $30,000 level and then went all the way back to all-time high. So, this could happen very well again. From here, we could go all the way back up to 60,000. And another thing that is worth pointing out is the only other point in time where I can see that the RSI went this low as of today. It's back in March 2020. So but pretty much 2 years ago, and the price was $4,000. So we went from $4,000 to $60,000 in those 2 years. That could very well happen again. If we take a look at Ethereum, I think the outlook is very similar. We broke below the long-term support line. We're now at the support level of about $2,500. So we have psychological support at $2,000. And then the actual long-term support is at $1,700. I do think we're probably going to bounce around in between the current $2,300 and $1,700. I think it's unlikely that we go below that level. And then looking at the RSI, I think it's worth pointing out we touched one of the lowest points today. And the only other time we did that was back in March 2020, the beginning of the COVID pandemic, when the price of Ethereum was just about $80, right? So we 40x from there. And this could very well happen again. Ethereum adoption has pretty much just started last year with NFTs. People's attention to Ethereum has only turned in the last 12 months. So, and if you compare this to Bitcoin, Bitcoin was, $4,000 2 years ago and it touched $70,000. So Ethereum could very well do exactly the same thing. All right, so let me start talking about my opinions and my ideas for 2022. Of course, this is just for entertainment purposes. I am not sharing any financial advice. So let's start talking about how can you keep making profits with the current situation. So the first thing you can do, of course, is stable staking. So you can take your stable coins and earn a lot more than a bank would give you. Then you have taking parts to IDOs. You can do that for a launchpad, which means that you get much more exposure to a lot of IDOs and easier entry, but it's more expensive. Or you can take part to IDOs yourself, but you have high potential, but probably little opportunities because it's going to be hard to actually get into the IDO and get well listed. We have on a higher risk level, automated wealth management. Actually, in cryptos, this is probably more like automated trading and bots, but there is a few good ones out there that I'm going to talk about in a moment. One personal approach that I usually take in a bear market is reduce the amount of trades that I do and try to do larger trades instead to keep my profits at the same level. So instead of maybe doing 10, 15 trades at a time where I trade and I have a larger portfolio on maybe micro caps and medium cap coin, I try to stay on the large cap coin, follow the news and try to trade based on news, just maybe 3-4 trades at a time, no more than that. And then you go yield farming, so you can get more yield out of your favorite coins. And then on a higher risk level, you go holding on the long term. Now that depends on your personal preference on which coins you think are going to grow the most in the next couple of years. So let me get started by talking about stable coin staking. You can stake USD and gain 20% APY every year on Ancor protocol, which is part of the Terra Luna ecosystem. This is much more than any bank would give you, and you can even protect your deposit through insurance. So this is a good way to keep making profits in such a market situation and wait until the market picks back up to move the money back onto trading platforms. Abracadabra money is another way you can do something very similar with higher interest, but slightly more risky. So you can go on borrow, and from the borrow page, you can see you can borrow USD. And from the USD, basically what you can do, you can say, let's say, for example, we're going to borrow 1,000 USD. and we can change leverage. And basically what this allows you to do is to say, I want to get liquidated at a certain price. So if the asset that I'm borrowing falls below this price, I'm going to get liquidated, so I'm going to lose all my position. But let's say you set it to 79 pence. Now, UST is a stable coin. It's meant to be $1. And during the history of Terra Luna, it only ever lost its back to the dollar and went down to 94 cents. So it's very unlikely to happen. It's very unlikely to ever go down to 79 cents. Now, if that was to happen, you would lose your entire position. But if you look at the approximately APY, we're now looking at 56% every year, right? So this is really good. Of course, a lot of people are doing this, so there isn't much liquidity. And one thing that you can do is go on Twitter and follow MIM replenishes, Magic Internet Money replenishes. Now, this will give you alerts like this one's, telling you when you can use the UST pool to gain some APYs across the year. So this is another way to gain, some profits using your stablecoins. Next up, I want to talk about BlockFi. So BlockFi, it's another way to gain some interest on your coins. Now, this is not just stablecoins. These also include Bitcoin, Ethereum, and they also give you a crypto card with 1.5% cash back. So definitely go check them out, read through the website. A very good website, and they have pretty decent staking APYs. Now, next up, I want to talk about different options that you have. So if you look at this APY returns calculator, what I'm interested in this page is really just a list of things that you can do. So BlockFi gives you about 8.6% on stable coins, which is not bad. So if you have USDC or GUSD, that's a good APY. Crypto.com gives you 6%. Binance Savings, pretty much like a bank. Celsius Network is probably one of the highest ones with 16% on DAI. We got Nexo, which is very famous for staking stablecoins with 10% on USD, USDT, and so on. Coinbase actually quite low, and so on. So I'm going to put this page link in the description down below. You can go check it for yourself and choose the one that best applies for you. So I want to show you what happens, for example, if you put some of your money in Ancor. And let's just go through one scenario. Let's say that right now you take out some of the money that you have on your trading platforms, let's say $1,000, and that's going to give you 19.6% every year. So if we just calculate it that way, of course, we're going to get $196 profit at the end of the year, which may not seem that much. And then if you look at the way this will work, on the first month, you will get $16 and then so on. So every month you get $16 of interest. And then of course you get the interest whenever you take the money out of the protocol. But I think what's more interesting is if you have more liquidity, and let's say you can deposit $100 every month on Ancor protocol, then it starts becoming a bit more interesting, right? So across the year you'll make $300 and invest $2,000 total, and then you can have a nice breakdown here. And let's make the case that you have bit more money, so you can start with $10,000 and deposit $1,000. Effectively, what you're doing, you're increasing your revenue by $200 every month, right? So at the end of the year, you're going to end up with a total profit of $3,000, and you're going to invest about $25,000. So this is definitely a good option if you, no matter how much money you have, really, right? So you can start with little money, or you can start with a lot more money. You're still going to get very good interest. Another thing that we talked about is launchpads. So I just want to show you a couple of launchpads. So CryptoRank gives me the full list of launchpads. I'm just going to take one of the ones I'm more interested in, which is Paid Network. And then if you look at the IDOs they've done, and we order them by date, so these are the ones I'm going right now. If we look at the recent ones and we look at the current return on investment, and we just scroll through the list, this is 14 times your investment, 2 times your investment, 1.3, 34 times your investment. 12, 0 ATA, so a bit of a loss here. 3, 4, 3.8, 0.5, so another bit of a loss. 5 times, 6 times, this is absolutely huge. The list continues, and there is like 20 times, 30 times. And the ones that are on a loss, they're not, terrible. Some of them are a bit lower, but then if you look at the all-time highs as well, you see like 100x's and so on. So if you manage to get into one of these launchpads, and I'm going to put a link in the description down below with a full list. We did a separate video about launchpads I definitely recommend checking out. Then this could be a very, very good way to keep your profits high in 2022. Next up, we talked about automated wealth management. So one of the platforms that I started looking into is called StoicAI. Now, StoicAI is pretty much just a very smart automated trading bot that follows the market. So as you can see from the chart they put on their website here, they managed to outperform the market by quite a lot, but they also have quite a lot of exposure to the market, so to macro trends. So if the market is going down, like we've seen from May to July, then your portfolio will go down exponentially. And then if it's going up, it was going to go up exponentially as well. So it's just a better way to trade, really, if you don't have the skills or the time to follow your portfolio. I definitely recommend doing your own research. I found very mixed opinions on StoicAI and similar platforms, but it is a way that you can limit and mitigate your risks, but still be exposed to the whole market. Lastly, if you do want to do large trades on your own, definitely follow us on Twitter. I'm going to be sharing most of the trades we do, and the planning, the entry point, the exit point, the support levels, and the resistance is a really good way for learning and a really, really good way to actually get your hands dirty on some good trades across the year. And lastly, if you are holding long term, you should probably think about staking. There is no reason why you wouldn't stake if you're holding for, let's say, 2 or 4 years. So for Ethereum, there is no way, unless you have, I think, more than 64 Ethereums to stake officially on the Ethereum blockchain, so to become a node. So the only other way is to use a protocol like Lido. I'm going to put a link to the description down below. And Lido gives you 5% APR on Ethereum, and then 8% on Terra and 6% on Solana. Terra Luna, you can stake it yourself as well by simply downloading the Terra station. So that's it for today. I hope you enjoyed the video. Feel free to ask any questions and don't forget to join all our channels. Thank you very much, and I will see you next time.